video, I talked about 2 ways to save for college, probably the 2 most well-known ways, which are 529 college savings accounts and UTMA or custodial accounts. Today I'm going to talk about some alternate ways to save for college that you might not think of, but are also valid. The first thing you could do is just put money away in an investment account in your own name. This could be a joint account with your spouse, or if you're single, just an individual account that you put as much money as you want to in, and you can take out anytime you want for any reason. This would be normally called a taxable brokerage account. The money can be invested any way you like, and it's not subject to any IRS rules as to why you have to use it or when you can use it. So for example, if your child doesn't go to college, if they annoy you, if they marry someone you don't like, who knows what can happen in child rearing. Believe me, I have those fears. You can just use that money for anything you want. Buy a boat, finish off the man cave in the basement, save for your own retirement. A taxable brokerage account has ultimate flexibility, but it has no tax benefits. So every year, when the investments within the account earn dividends or interest or capital gains, you will get a 1099 in the mail on that account, and you'll need to add those incomes to your bill for income taxes. So no tax advantages, but ultimate flexibility with the taxable brokerage account. The other thing you can do is you can use Roth IRA money for education expenses. And you're thinking, well, I thought we were talking about college savings, not individual retirement accounts. True. But what we want to see is some alternative uses for Roth IRA money. Roth IRAs, as a reminder, are an individual retirement account that you put money in without getting any tax deduction for at all. The money grows tax-free until you withdraw it at retirement. But a little known fact about Roth IRAs is the money that you put in can be taken out at any time without taxes or penalties. So for example, let's say that I have 2 years worth of Roth IRA contributions in my account. You can put $5,500 a year in a Roth IRA. So let's say I've contributed for 2 years. My own money is $11,000 in that Roth IRA. The growth has gone to $15,000, so I've got some growth and some principal in that account. My child starts college and I'd like to use some of that money to help with college expenses. I can take up to $11,000 from that account without triggering a tax bill. Now, let's say your child doesn't need the money for college. They get a scholarship, hallelujah, or you're paying for it other ways. Well, great, then you've just upped your retirement savings and you've got that Roth IRA growing tax-free for retirement for yourself. So it's really a no-lose situation. So that wraps up the ways to save for college. I'm sure there are others out there, but those are the 4 main things that I typically talk to clients about.